we just started the screen recording, and this would be our point of interest for an entry. Just trying to set up this. I got the Top Step Express accounts, the fresh ones already set up and everything, so that's done. Alright, cool. So as of now, we're looking for a short stop at the high, 30 handle stop. First 1 minute low is the New York Open low. Let's see if we get an entry here. As far as a premature entry on NQ, we wouldn't want to see a premature entry because the draw is the New York Open low. Alright, cool. So this trade is not something we're actually looking at as of now. We've just taken the draw. Okay. Yeah, guys, as of now, I'm not looking at the Discord chat. I'm just setting up these new Express accounts on the second laptop. The second laptop VPN trade syncer. Alright, give me a second, guys. We got to get this API key. Alright. API. So I've connected Top Step X to Trade Syncer, and I'm struggling on getting this API key. I forgot how to do it. Yeah, so right now, guys, we've got a neutral bias. So there's nothing for us to take here. How come the 4 hours bearish? So you can see price trades up into a 4 hour bearish gap to the left, and the draw would be bearish towards the next 4 hour low or bullish gap. As you can see here, the draw is the next 4 hour low. There's no bullish gap, and we've not met that low yet. Yeah, to be honest, they're not really making it very easy right now to connect these Top Step X accounts It's a trade sinker because basically I need the API keys, and I've gone on to Project X dashboard, and then I've purchased the API keys, but the Top Step X account is not linked to the Project X dashboard, and I can't remember how to link it. And I've clicked on the Top Step X dashboard, Project X linking, but then it comes up with pop-up window blocked, and then API key subscription not active, but the subscription is active. So I'm gonna have to speak to the support here. It's just so I can put it with Trade Sync here. It makes it easier in the long term. Yeah, no positions as of now, guys. Obviously, I'm monitoring price on this screen, and then I'm sorting the other business on the other screen. Yeah, nothing as of now anyway, guys. So that's obviously the overall bias of being bearish came from the 4-hour time frame, and at the time we had an intraday, I believe, bearish bias as well. So that we was looking for shorts. Price took the invalidation low, and then it's reaching towards the 4-hour draw, which is actually this relative equal sell side. Yeah, Edward, brother, there is a video on YouTube that goes over the full way that we determine bias, but it's purely off imbalances. And you know, even if you wait until 10:40, so when we next do our bias, which will be at 10:40, because right now I'm not going to do my bias. We're not going to get a position in this macro likely. So at 10:40, we redo our bias. We'll work down from higher time frame to lower, and then I'll explain it in more detail there as well. I find it confusing. No, definitely not, brother. You find it a little bit at the start, but you know, as you backtest more, make sure you backtest more, by the way. You know, you need to make sure you're completely competent with the model in all aspects. Yeah, so basically what I did, I created a Project X account, another one, under, basically, I'm not going to say the name, but yeah, basically under someone else's name. Um, I've created the API subscription. I've gone back into the Top Step X platform, and it's kind of strange. Okay, so this is the end of the first day of macro. We're going to be waiting for the second day of macro, and we're going to go over all of the questions that you guys have asked during the second day of macro, etc. Alright guys, so we're just looking at the bias for this second day of macro. Let's have a look at the hourly time frame here. So you can see sometimes when you do your bias, it does help either whether you have a wider screen or you kind of just drag NQ to make it slightly bigger. So it is a bullish hourly time frame, as you can see. And then on the 4 hour, we have a neutral 4 hour time frame. It was bearish and it met the draw, which was what we spoke about, you know, the relative equals sell side. That's already been taken, and we have a neutral bias here. Okay, the daily's not going to change because the daily doesn't change until we've taken far down, so there's no point even looking. Alright, cool, so that concludes our bias there. Okay, well, someone did mention the daily. Let's take a look. So no, so the daily would only change to being bullish if I delete this, if we trade into this daily bullish gap, which is at 286. So as of now, we've not traded into that area. Essentially, if we take the 15-minute draw, we would get a nice strong bullish bias from that given point there, which we could take. As of now, there's nothing for us. Yeah, the 5-minute would be bearish, yeah. Got bearish 5. And the reason why the 15's bearish, not only because we're in a bearish gap, but we inverse the bullish gap to the left, so we're bearish on both scenarios. This was a 15-minute bullish gap, so that got inversed to the left. So the draw is the 15-minute draw, which is essentially just the next 15-minute low. And then the hourly is bullish because obviously we're trading out of a bullish gap, but we got a 30-minute ticker on that. And then on the 4 hour, as you guys know, we met the draw. We're not trading out of anything. So that's why our bias concludes to be bearish as of now. So even though price will give you signs of, you know, bullish market structure, right? So we sweep sell side, price shifted higher in market structure, and in fact we do have an inverse bearish order block paired with a gap, and a lot of people would take this as a long, but our bias is currently intraday bearish. And the reason why our bias is so important, now everything's based off probability, whether price draws higher or not, but you need to understand is that I would say 80% of the ICT space is going to determine their bias on the higher time frame. Where is the next 4 hour and the daily likely to draw to? Okay, that's fine, but when it comes down to determining your overall bias, we are taking positions inside of macro, which is usually and always on the 1 minute to 5 minute indication on where price is likely to draw, and also the model forms on the 1 minute time frame. So we are only in a position for, on average, around 15 minutes at max. So if you're getting your bias on the daily to 4 hour time frame, and understanding on the daily that it's likely to draw lower, or it's likely to draw to, let's say, previous day high or the previous week high, etc., or new day opening gaps, so wherever your draw is. But our bias takes into account both intraday and higher time frame draws. So obviously we're looking at where the daily, the 4 hour, the hourly is likely to draw in correlation with the intraday as well, 5 and 15. What strategy you use to pass those top step accounts? I just saw your story on Instagram. I had the 15 as bullish. The 15 is definitely bearish. It's definitely not possible that you could have a bullish 15 when we're in a bearish gap. Yeah, I explained this one yesterday to you guys when I wasn't recording for YouTube, but I'm currently recording on YouTube, so I can't really say whilst it would be recorded on YouTube. I will type it in the chat though, because they can't see. I don't want to expose myself and get banned completely, you know, so I'm going to type it in the chat because I don't know who's watching my YouTube channel, you know, so... Right, excuse the spelling, but that's basically the method to passing accounts. It costs 4 times the price of an eval, but if you don't care about the cost and you want to pass the same week, then there you go. That is your game plan. I'm not going to read it out, but it's in the chat. So technically you're not allowed to do this on prop firms. It's completely against the rules. But if you want to pass the same week, and essentially each eval, so the average cost of an eval across My Fund of Futures, Take Profit, Alpha Futures is the most expensive firm out of all of them, and the cheapest is Top Step, and then you have, I believe, Take Profit, and then My Funded is third most, and then yeah, Alpha Futures. But the average eval cost between all of them is around $130-ish. So essentially, without me kind of saying it on YouTube, but it's $130 times by 4, and that would be your price of a funded account, because they have no activation fee. So it'd be 130 times 4, so your average cost is about $450 per, guaranteed, it is guaranteed, around $450 per funded account that you get. So whether you only get one, it's up to you. You can pay $450 to just get one, or you can simply get 5 at a time and repeat the process until you have everything you need. So it's completely up to you. Or you can trade the model normally, or you can essentially purchase 5 accounts and do it that way. Take a position at the New York Open, or take valid positions, over leverage slightly and pass the account, or trade it over a month's basis. One thing I will say, just to make sure that you guys meet the consistency rule, so the max amount of contracts that you can trade with on, say, My Fund of Futures is 3 contracts on the eval stage, right? So you're going to be taking 3 contracts on the whole bigger picture, you know, and 3 contracts is all you need is 25 points. So to make sure that you don't set a TP at 25 points, you want to set your TP at around 26 points. So when the account does get the 1500, you get around like $1,560 or $1,580. And what you want to make sure is that that extra $60 or $80, you need to basically cut that off. So once you've got your 1500, make sure you just trim it down. So I recommend trimming your accounts down with, this is just for consistency, so trim it down on micros. You can start with 2 micros, but on the safer side of things, just do 1 micro and monitor price action, and you essentially have to try take losing trades. And if a trade goes into too much of a profit, I like to just basically spam it. So you just get loads of broker fees, and eventually you'll trim that 60 off, but don't go below 1500. So trim off about $5-10 at a time, keep trimming until you get to around 1510, and then you'll be good. Especially Top Step, on their consistency rule, they actually have a kind of giveaway period where you can be within, I think it's around $150 or around 0.5. I think they have a 0.5% consistency. So you can be slightly over the consistency and still pass. A couple of you guys wondering why we didn't take a short is because there is no bullish order block. Do you have a daily results section for the trades you take? Absolutely, we have that right here. Okay, so there you go. This is our yearly results. You can take a look. I haven't fully updated December as of now, and what I should put, I want to ask you guys, what do you guys think I should put for the result on yesterday? Should I put that as break even on the sheet? Because for me personally, it is break even, but as far as the model, it hit TP. We was already hit TP, and it was already a TP. I believe I'm going to put break even because this is my results, and that would be my results as we're going through Q4. Yeah, I'm going to put it as break even. Yeah, I'll just have to add it in the notes section. Yeah. Yeah, also guys, you have until Sunday to update the PVP section on that Google document, because that's going to be updated on Sunday. So that'll be out to you guys. Now, as far as talking about no order block present, there was an order block present, but price had already displaced enough and taken out invalidation lows. So the 5 minutes gone neutral. Okay, so the 5 just closed. Yeah, Joe, is that you passing evals? That was your funded account. Why would you take a trade on your funded account? I don't understand. You're going to blow your funded accounts. You do know that, brother. You're going to be a 2026 loser. 213.75. Yeah, Joe, I don't understand your concept, brother. I don't understand your thought process, how you even sat in your chair. I mean, I would have gone absolutely insane if I took a position that was incorrect. I don't even know how you can post that in the chat. It's embarrassing, brother. It really is. Yeah, so points to help you with your bias to make things slightly easier. On the 5 and 15, if you have gaps like this to the left that are quite hard to identify to whether they've been inversed or not, then just have them marked out and have them already completely stretched all the way to the right, so you have it. So our bias, as of now, stands to being bullish, as you guys already know. So as you can see here, price shifted market structure. and the invalidation low would be this one here, and price already took out this low, so it shifted, it took out another low and another low. Price shouldn't have taken out this point, and this point obviously got taken after, but invalidation low would be this one, and price had already shifted to that area there, so that's why we wouldn't take a short from that point. As of now, we have a clean sweep of sell side, the 4 hours met the draw, we have a strong bullish bias, and we're going to look for a position for longs. Do you consider price being in a discount or premium on the lower time frame relevant? Well, as far as price being in a discount, it's very obvious that we are in a discount, and just because price action is in a discount or a premium doesn't mean that in a discount you can't take shorts and in a premium you can't take longs. So we only purely focus on bias and a sweep of liquidity to pair, and then we look for the rest of the model. So as of now, we've got a bullish bias and a sweeper sell side. So step 3 is to see a shift above a previous short-term high, and preferably to see a bearish order block. And if the model was paired with that, then yes, we would take a position. And of what you've seen here is that we had a shift in structure, but this was no bullish order block. So there was nothing to be paired with the gap. So this was a write-off, regardless whether price trades into the gap or not. It wouldn't be a valid position. Price continues to shift and takes the invalidation low. And on this point here, as you can see on ES, this is a bullish order block, which is paired with the gap. And we have a bullish order block here. This already been previously disrespected, but that's, you know, complete disregard to what we're seeing anyway. This bullish order block is actually invalidation low, and price closed below it. Yes, it's paired with the gap, but this low is not the point that we wanted to see price take. It already shifted enough, and hence drawn in favor of the trade, if that makes sense. And we've seen this repeat many times. Max allocation on Apex. Lovely work, brother, lovely work. So how much capital do you actually have now, Jack? Because I know you already had a lot before. You already had quite a lot before. I believe you was third on the PvP sheet before. Puts you over 2 mil. Oh shit. It's gonna be pretty tight, to be honest. I think you might have overtaken C4 with C. I don't know what C4's on right now. I know he's got 20. Well, he's actually got 30 PAs, but he can only trade 20. So he's got 20 PAs, 5 top steps, 5 take profit accounts, my fund of futures as well. I'm having trouble identifying order blocks. Yeah, so basically an order block, if you've not seen my video on YouTube, then it's just simply a up close candle followed by an engulfing down close candle. So for example, there's actually no order blocks here. you can take an order block from over here. We have a down close candle on NQ followed by an up close, which is engulfed the previous. It's a bullish order block. When it gets inversed, it's then a breaker or mitigation. I suggest you watch my video on YouTube because I go a lot more in depth, and I don't want to bore the whole of the Discord going over this topic because 99% of you guys completely understand it. And I talk very in depth on YouTube inside of the free mentorship on my YouTube. You can see that there. I go over order blocks. Up close, down close, bearish order block. Up close, down close, engulf. Also bearish order block. Price closes above it. Got inverse, didn't take a low. It's a mitigation. So that's just some clean examples. Hopefully that answers your question. For a high probability order block, if you have consecutive back-to-back up closing candles and then an engulfing candle and then consecutive down close candles after, then that's a more high probability order block. But that's something that we can get into at a later date. I accidentally traded my funded, but got very lucky, but the chat seems to be coming at me otherwise. Well, yeah, I mean, how can you accidentally? I don't accidentally fall off my balcony. And, you know, I don't accidentally smoke some shisha. You know, if I didn't want to smoke shisha, I wouldn't smoke shisha. You know. I don't think Jack accidentally passed his Apex accounts. I think he had a pretty strong intention. Yeah, you have to take self-accountability, brother, because I'm not coming at you or anything, but I just want you to understand that we are going into a new year, and next year is going to be a very, very big year, and I want to make sure that you are in good standings and you do achieve exactly what you have planned out for yourself. But by making these slight, small errors, they do very much add up. And before you know it, you will lose those accounts. And I don't want that to happen, brother. So don't think I'm ever coming at you, but I'm just giving you the correct guidance. I'm not going to sit here and say, oh, brother, well done, you made some profit. I don't care if you made any money, right? Because I know with the model, you're going to produce a very, very strong income indeed and grow your capital over a period of time. But not like this. You're going to go back to square one. So it is frustrating to see. So that 5 minute that we had previously marked out got inversed. So we just need to relook at this. So inverse took the low. We got a low at 193.75 and then to the left. There's nothing, so 210. Yeah, 210 same level, so we have a neutral 5. But, you know, regardless whether we have a neutral 5, we've still got a bullish bias. So we still got a bullish 15. This is what we're paying attention to now, because the 15 in 1 minute's time is what changes our bias. We're basically trading towards the end of the macro, as you can see. So the end of the second day macro is slightly about to shift. So that's pretty much it. That's the end of the second day of macro. There wasn't any positions for us to take there. Neither inside of the first. Yeah, absolutely. Next year is going to be, yet again, a very volatile year. And I would say next year is even more volatile than this year, which is absolutely perfect. That's what we look for. One of the slowest years for me, I would say, was 2023. 23 and parts of 24. 24 through the summer was relatively slow. And I still had very clean months as far as payouts, but it was relatively slow, to be honest. But yeah, 23 price wasn't really moving that much at all in all markets, even crypto. So 2026 is going to be very, very big year indeed. C4, my brother, have you got your mic on? I mean, not your mic, the speaker. Yeah, we were saying, how much capital do you have now? Because Jack has got to, I think, like 2.1. Yeah, no, 2 million in capital now. He's taken things to another level. Be interesting to see on that leaderboard. You're not taking any flights today, C4, are you? Yeah, it's jokes, mate. C4 made pretty much. Well, I don't know how much he makes from his job, but yesterday he made pretty much probably his whole year, which was mad. Yeah, it's already happening. Me and C4, we're linking up. We are linking up. It's gonna happen. Alright, I'll speak to you guys for the lunch macro, so I'll unmute my mic at 11:35. Alright, yes guys, welcome back for the lunch macro. Okay, so we got a bullish 5. We also got a bullish 15 as well. We also have a bullish hourly. We also have a bullish 4-hour and a bullish daily. So we have a 100% the strongest bullish bias that you can get. So if you're thinking about how do you get a strong bias, well, it just consists of multiple time frames like this, all leaning towards a strong bias in the same direction. So we have a strong bullish bias. We're looking for a shift higher in market structure. We have a bearish order block on ES, and that's the one that we'd look to be inversed, to be paired with a gap, a sweep of sell side. So essentially we're just sitting on step number 3. So step number 1 and 2 have already been ticked off, which is a sweep of sell side that you've seen. So that's minor sell side, higher time frame sell side. All of it's already been taken. And then we have a very strong bullish bias, and now we're looking for a shift in market structure on both assets. And we work through this same procedure every single time. So this is our bearish order block. So currently acting as a bearish confluence for price to draw lower, and that's where we look for that bullish shift in market structure. That's correct. I believe 1129 is at the high. Yes, that's the one you're referencing, and that's correct. That would be the invalidation high. And whether that's equal highs, which it doesn't appear to be so, this is the high which you can mark as IV and just paste it onto ES as well. So as simple as that. We now just wait for price to shift market structure, and then we look to see if we get the model to be presented. We also have another bearish order block here on ES, so we can also use this one to be paired with a gap as well. So it doesn't matter if this one doesn't pair, this one can pair as well. When you have this much of a strong bias as well, you don't have to be flicking onto the 5 to see if it shifts bearish, because it doesn't make any sort of difference. It would make the actual position to be B+, but it's not going to affect the position for you to not take it. So it doesn't make any sort of difference at all. As far as your risk management, Waleed, make sure you just look at this section. You can see here, guys, we have a shift in market structure on ES, but no shift on NQ, so there is no positions. Also on NQ, we have no fair value gap, so nothing as of now. So follow this here, risk management funded, and you'll be trading the MNQ, so the micro contract. No need to calculate your risk, brother. It's already calculated inside of that section there. So yeah, we've seen a failed shift on NQ, a shift on ES, so price is likely to actually draw back towards this low. Yeah, the one thing that's quite weird is that you'll never meet someone called Milo unless they're a dog, to be honest. I've only ever met people called Milo if they're actually a dog, so it's a pretty distinctive name. I thought that to myself, you know, a few months ago. Not only the biggest trader in the space, but at least no one's got the same name. Bit of glass bottled water. No chocolate milk today, guys. We had a break, a daily break. Alright, so this is looking very clean. We do like this because we got now a bearish order block on both assets. So we'd look for this to be inversed. Obviously, it's acting as a bearish confluence, and the likely probability is that it sends price lower. But this gives more of a probability that we're going to have it paired with a gap. So make sure you mark it out. So bearish order block on ES and NQ. So simply we just look for that to be inversed, price to shift above the high with a 100% bullish bias. Simple. John C said stop loss is going to be pretty large. Why would it be a big stop? I mean, our stop placement would be at this low here at 152. So it wouldn't actually be a huge stop placement. As long as it's not greater than 60 points, then it's perfectly fine. No, so we always run our stop placement at the previous short-term low if we was to get a position. There's no reason why you would take a long around this area and then run a stop placement at this low or this low. You'd run it at the previous low, if that makes sense. But as of now, the bearish order block acting as a bearish confluence, failed shift. There is now two reasons why price would likely draw back towards this low. So that's just understanding price action on where it's likely to draw to, or not for what we want to see. We want to see a shift, but we haven't seen that as of now. What's the difference between static and full on Apex? I don't actually know, to be honest. I've not actually looked into the difference between static and full, but I just recommend you just go for the normal 50k Trade of 8 account with Apex and get as many as you can, preferably 20. So whatever code you use to get Apex accounts, I mean, it's just going to give you the same discount to what they're currently applying. There is no special code to give you a bigger discount. It will just be any code applies to what the current discount is. You can use a code like save 90 or save 50, save now. I believe all of these codes, they're all active. They all do the same discount. That's if they're even running a sale. I mean, they run a sale 24/7, so. Yeah, so as of now, price has taken a small portion of sell stops below this low. We're still looking for a shift in market structure. Oh, scene, mate, scene. I don't think anyone saw your message, scene, so it should be all good. Yeah, so obviously that'll be our new shift in market structure, which will be above this short-term high. Delete that order block. We got a bearish order block here and also here. That's still our same invalidation high, which is this one. Okay, so NQ just closed up the possibility of getting a bullish gap there. So that's also an example of a failed shift in market structure. Alright, cool. So starting to see a shift in market structure here. Pay attention to this high on ES. So if we put a bullish gap in here for price without taking out the invalidation high, then we'd have this paired with a inverse bearish order block. Yeah, so as far as the model for this lunch macro, we haven't seen anything as of now. Obviously price shifted market structure, took out minor buy side. So there's not been any position so far today. I'm going to take a look at Forex Factory for next week, see what we have on. Okay, so Tuesday next week is a very, very eventful day, which is good. So Thursday next week we have CPI, and then we have, that's basically it. Yeah, so Monday, Tuesday, Wednesday, Thursday and Friday are all tradable days next week, all perfectly fine to monitor price. We have a lot of red folder news coming out 8:30 on Tuesday, and then at 9:45, which is the start of the macro, we have red folder, which should give us some sort of data lows or data highs. So next week is looking clean. Which one is the last day you trade? So the last day that we will trade, I'm just going to look on Forex Factory the days after. So from what I can see here, we shall be able to monitor price on December 22nd, December 23rd. And when it comes to December 24th, it really depends on the current price action. Because what you'll tend to see during December is that there will come a point when the price action completely dies off and goes into barcode price action, and there's no volatility. That's what happened last year, that's what happened the previous year, so we'll see whether that's the case this year. But once we get to December 22nd, we shall monitor price, and same goes for 23rd. And then New Year's, not New Year's, what do you guys call it on the 24th? What day is that? I forgot the name of that day. Christmas Eve, yeah. So on Christmas Eve, we will monitor price action, but it really depends on how price action is before the New York Open and how volatile it is. If it's volatile, then we shall monitor price. December 25th is USD bank holiday, and we are not, monitoring price obviously on Christmas Day. The 26th, we shall not monitor price on the 26th because it is the day after bank holiday. There's Friday, it's also the day after Christmas Day. This day is a very low probability day to monitor. And then you have Saturday, Sunday takes you up to the 28th, 29th. On the 29th, as you can see here, as we go up until the new year, we have Monday 29th, which is a tradable day. Same goes for December 30th. We can monitor price. We have FOMC meeting minutes and unemployment claims on the 31st, so we can monitor price on the 31st. The 1st of 2026 is a bank holiday, so we're not monitoring price, and then it's Friday the day after, but is PMI. So we have a red folder news on Friday, day after bank holiday. We can monitor on Jan 2nd. So hopefully that gives you guys a standing. If you would like me to create a sheet which basically shows which days we're going to trade and which days not, so you guys don't have to, kind of remember, then I can create that. Just let me know in the chat if you want me to, create that. Okay. Yeah, so essentially we don't stop trading for, say, a week or two. I mean, we monitor certain days of price action and certain days we just can't monitor price. December 26th is just one of those days which on Forex Factory shows as a day to monitor price, but we all know, and from past experience, this is a very low probability day to avoid. Okay, so I'll start working on that sheet and it will show you guys what days we're going to monitor price and what days not. One of you said, what is my plans for New Year's? So New Year's, I'm going to be monitoring price action. That's the only thing we're doing. We're getting ready for 2026. So guys, this is the end obviously of the lunch macro. I'll upload this stream onto YouTube as usual. It's been great speaking with you guys this week. And yes, this week is essentially closing out for a clean profit, but for me personally it is -1R because I didn't close out for TP yesterday, so that's fine. We're going to be back on Monday at the 9:20 AM and I'll be live with you guys. Speak to you guys shortly. And also, guess what, over the weekend we're going to be doing a backtesting session that shall go ahead. Last weekend we didn't because part of my family member came down to the place where I stay, so we shall host a backtesting session and go quite in depth for that as well. I'll speak to you guys shortly. Have a great rest of your weekend.